morning, everyone, and welcome to the European crossover webinar. And we've seen some dramatic moves with the yen and across the board. And we've even seen the Dalian slide below 106. This is actually a good area right here that we have on the just below here for the Asian analysis. Let's take a look here. Just below here, we're looking for a move just below, right around 595. And that's where we're at. I mean, we've dipped even a little bit further at the 580, but this is probably a decent area here. I think you probably see some shorts going to come in and cover at these levels here. But certainly, like I said, we've seen quite the dramatic sell-off here with these other pairs or crosses against the yen as the yen is strengthened. One of the key things that we've seen overnight also is we've got that on the story here is the yuan and breaking that key level, and pretty much tells you that it's all done as far as these trade talks. They're just going to go on and try and defend that, and I think that's the end of that. And trade talks are basically over. That's it. Hang on a moment. Also seeing the euro move higher. I've got a potential move up here to 1554. 1154 before I think the market will ease back a little bit here. So we could potentially go and move lower with the dollar index, potentially can get down here to 97.65. We finally cleared the 1923 area. Remember, we had that as a pivot, and that opened the door for 1943. And what we had was, I think the next level coming up is, I think it's 1956. Yeah. So we've actually made it there and pulled back. Actually, we got it up to 1958, and we paired back down here at 50. So a little bit of a pullback from that level. So we're going to move into the news right now. And we're going to move into the news. I'll touch on some other things, but Scottish poll sends message to PM Johnson. Scottish voters would vote for independence from the United Kingdom, according to a poll this morning. This is the first major published survey to show a lead for the independents since March of 2017. Asked in the Ashcraft poll how they would vote in an independence referendum, 46% they would back independence and 43% against. Excluding don't knows, that amount to 52 to 48 lead. Whether PM Johnson takes that as a preemptive warning about the risks associated with taking the country towards a no-deal Brexit remains to be seen. The headline we'll be pushing today is a £1.8 billion cash injection he will announce for Britain's public health system. While the Brexit saga goes on, public and politics in much of Europe will be on hold through August. The final read of markets opposite PMI figure for the Eurozone in July, due at 800 GMT, should not create too much excitement. World markets suffered another jolt on Monday as China let its yuan slide beyond 7 per dollar for the first time in 11 years. Dropped almost 1.5%, which was the biggest one-day fall in the offshore yuan since at least 2015. The slide in the yuan, though psychologically important at several levels, is itself another dramatic escalation of the trade war between Washington and Beijing following President Trump's decision to impose tariffs of 10% on its all remaining Chinese imports on September the 1st. The People's Bank of China clearly linked the two, and even though it pledged to fight speculation, showed its power over the exchange rate. Under the influence of factors including unilateralism, protectionist trade, expectations of tariffs against China, the yuan has depreciated against the dollar today. Breaking through the 7 yuan per dollar, the PBOC said in a statement, Trump's constant complaints that the dollar's strength is caused by other countries stealing a competitive advantage on the United States is heightening fears that the trade wars will morph into full-blown currency wars with the added volatility they may bring to world markets and the global economy. In a flight to safety, Japanese yen and Switzerland's Swiss franc surged against the dollar and the euro, prompting Japan's top currency diplomat Yoshiki Takuchi to declare Japan was ready to take action in the currency market if excessive yen rise to hit the economy. Economists at Citigroup at the weekend that the possibility of a currency market intervention by the U.S. Treasury was still on the radar if the dollar appreciates a further 5%. The dollar's sharp retreat against the yen, however, so the dollar's index slipped back to the July 26 levels, and your dollar pushed higher as well. Battered by a no-deal Brexit nerves, and growing speculation about a snap UK general election, sterling was probing 121 first thing and last week's near two-year lows against the euro. The latest trade conflict has whacked emerging markets, with the yuan sliding, dragging the emerging market index to its lowest since May and sending emerging equity indexes down for its ninth straight day of losses. World equity markets have been hit by diminishing expectations that the Federal Reserve would cut interest rates after it lowered rates last week for the first time in 11 years. Futures markets now foresee less than a 20% chance of another Fed rate cut next month, although they are also wiping away hopes this move will be a successful mid-cycle ease and still have about 100 basis points of cuts priced over the coming year. The failure of the Fed to move to steepen the yield curve is a real concern among investors, partly on the trade and recession fears and partly on safety bid from equities. The yield curve between the 3 months and the 10 months has fallen to its lowest in over a decade at more than 31 basis points. Very key there. And we'll get to that, to the yuan story. But the Australian and New Zealand dollars were taking collateral damage on Monday as investors shorted them as liquid proxies for a sliding Chinese yuan, and speculation Beijing could use its currency as a lever in the Sino-US trade war. Both currencies have taken a spill on the safe haven yen since the U.S. Threatened new tariffs on China last week. Trade hostilities are likely to loom large when the RBA holds its August policy meeting on Tuesday, though it's considered likely to hold rates at 1%. The pause is expected to be temporary, with markets fully priced for a cut of 75% by November and to 50% nearly next year. RBA Governor Philip Lowe is also likely to repeat this recent line that rates will stay lower for longer, nod to forward guidance as is pushed down bond yields and the Aussie. The RBNZ holds its policy meeting on Wednesday and is considered starting to cut rates to 1/4 point to 1 1/4. Markets are priced for a move to 1% by the year end and 75% around the middle of 2020. Analysts assume the central bank will also adopt a more dovish outlook given growth risks at home and abroad, and lower its forecast for rates in the future. From a technical perspective, the Kiwi looks vulnerable to any indication that the RBNZ is prepared to go further, said Hamish Wilkinson, a senior dealer at Kiwi Bank. With the Kiwi sitting at some pretty key historic levels, should the RBNZ be brave and aggressively lowering its OCR track, then they may really get some bang for the buck in lowering the dollar. And lastly, let's go on with this key China slide. Passed its key 7 low for the first time in over a decade. China on Monday will let the yuan tumble beyond the key 7 per dollar level for the first time in more than a decade, and a sign Beijing may be willing to tolerate further currency weakness in the face of an escalating trade rout with the United States. The sharp 1.4% drop in the yuan comes days after Trump stunned financial markets by vowing to impose 10% tariffs on the remaining $300 billion of Chinese imports. The PBOC provided the early impetus for the yuan bears, setting the daily midpoint of the currency trading band. Today's fixing was the last line in the sand, said Ken Chung, senior Asian FX strategist at Mizuho Bank in Hong Kong. The PBOC has fully given the green light to yuan depreciation. That's what I'm saying. The trade war is over. I mean, the trade negotiation, it's over. Been saying that for a while. People keep falling for it, and it's just like now this last thing with Trump is just too much, and now they're just basically China said, forget it, we're done. See ya. And that's it. With the escalating trade war giving Beijing fewer reasons to maintain yuan stability, analysts said they expect the currency to continue to weaken. In the short term, the yuan strength would be largely determined by the domestic economy. If the third quarter economic growth stabilizes, the yuan could stabilize around 7.2 or 7.3. Capital Economics senior economist Julian Evans Pritchard said the PBOC had probably been holding back against allowing a weaker yuan to avoid derailing trade negotiations with the U.S. The fact they have now stopped defending the 7 against the dollar suggests they have all but abandoned hopes for a trade deal. That's what I just said. The PBOC gave few clues about its intentions. In a statement on Monday, the central bank linked the yuan's weakness to the fallout from the trade war, but said it would not change its currency policy and that the two-way fluctuation in the yuan's value are normal. Under the influence of factors among unilateralism, protection, trade measures, and expectations of tariffs against China, the yuan has depreciated against the dollar, breaking through the 7 yuan per dollar, the PBO said. I'm telling you straight up, that's what it's about. And let's see here. Relatively quiet session today. We do have Mexican July consumer confidence. With that, we'll go on and move into the analysis. Okay, the euro has climbed back after a death spiral drop of last 3 weeks. The pair has potential to 1154 before a pause. Support comes in at 1084. So there you have it, folks. I think we can make it appear to right there, 1154, right there. And pull back is 1084 here. So let's okay, let's go move into the cable. And as I mentioned here, I think we have a chance to make it appear to 1154 before you see a bit of a pause here. So even though we've made a run and there's some 1128, I still think we can make this move up to 1154 before you see a bit of a pair back. Okay, cable simply trying to hold its lows. Even a pair back in the buck does not generate much action. Support is 2105 with resistance at 2224. So we're not even that far away from 2105, but that's support for right now. So let's mark that off. And we can't even pick up much here, so let's see if we can get something a little bit closer. We'll go right there, 2179 for today. I don't want to put the euro bullish. Certainly, we're coming off of these lows, but that doesn't mean it's bullish. Yeah, bullish if what you look at it on a 30-minute chart, maybe it's bullish, but this euro has just been there's no way I can, justify saying, oh, it's bullish now. We'd have to get, in order for this to be bullish, we'd have to see at least 2 consecutive 2-hour closes above 112. So it's got a long ways to go for it bullish. So it's, if you look at it, it's really still bearish, but we'll give it the benefit of the doubt saying here, but we've come off those lows, but still that's just in bad shape. Take a look here. Now we have to keep that bearish tilt on this here. Like I said, if you're looking at a 30-minute chart, well, then it'd be bearish. I mean, it's not even bullish. It's not even bullish on a 2-hour chart. So if you look at a 30-minute chart, you can say, okay, well, now we're starting to turn bullish, but that'd be on a 30-minute. We're not looking. The levels are set up very short, but the bias, you have to stick to the bias, and it's still bearish. Let's go with the Aussie dollar. The Aussie dollar has endured a thrashing, falling 300 pips from recent highs. The pressure will remain this week, obviously referencing the RBA, but a bounce can get us to 68.65. Support is 67.63. We're actually even below the 67.63 for right now, but we'll stick with that, the 67.63. Well, last week we had here at 67.45. Here, we'll keep this one in check for now because we are below the 67.63. So we'll stay with last week 67.45. And on the upside, we said it can get to 68.65. If we get a bounce, and we might get a bounce if the RBA holds. So we may not get that far, so let's go with 68.48 for now, which is still a pretty decent amount. Moving on to the Kiwi. The Kiwi has suffered technical damage, but bulls are simply gone. Major support comes in at 64.93. You can see that right here. We've already gone below that. So we'll mark that. We already had 64.93. And resistance comes in at 65.72. And let's go move into the Canadian dollar now. Dollar CAD has taken a pause after a solid rally. The pair looks ripe for a pullback to 31.67 with solid support coming in at 31.36. Resistance comes in at 32.36. Well, we're above that, but it's the equity weakness that is really spooking this pair and where it's getting its strength from. So we'll have to take a look as to where we can possibly, well, we'll show it here, this 32.36. Tell you what, we're going to stay with that, 32.36. And for support, right now it's going to come in right there at 31.85. 31.85. So resistance right here at 32.36. You can see here the euro still trying to push up a little bit higher. I think we make it up to that 31.54. So it says Peso was able to finally clear the major hurdle of 1923.6. You can see that right here. That was that pivot we had. I've been holding in place for so long. Was able to finally clear the major hurdle of 1923.6, opened the door for, and I don't know, I have 1053, I'm going to put 1943 for starters. 1956 will be resistance and support is 1917. Well, you can see the 1956, and we just took it out, but we're sliding below. So that's going to be our resistance, 1956. Now, we had 1917, but obviously we'll have to adjust that. And let's go and take a look at the 2-hour chart. So right now, support's going to come in right there, 1933. That's still quite a ways back, but if we were to pair back, doesn't seem likely with all the these emerging markets really getting whacked pretty good. We'll go right there, 1938.7. And with that, we'll go to the Dalian. The Dalian has reached the 630.78% retracement. Risk remains though, but the pair is very oversold. A bounce from here would be reasonable on short covering. Resistance comes in at 733 to reestablish shorts with support at 595. Well, we're right there at 595, 594.3, so we're up by basically half a pip. So we'll have our resist support here at 595. And we'll go with the resistance here at 676 for today. Okay, the dollar index has retreated from the breakout highs to major level 97.89. Support will come in at 97.65 with resistance at 98.27. That's pretty clear here. You know, like I said, here we're retracing back to this 97.89. We're kind of holding steady. But this is where I see the support. 97. You see that 97.65. That may equate with the euro being at 13.54. So let's go there. And resistance 98.27. You can almost make the case for 98.15, but that might be a little bit close. So we'll give him the benefit of the doubt for a little bit of a bounce area here at 98.27. And obviously still bullish, even though short term, it's gone taking a little bit of a dip here. Let's go and move into the cross rates now. Okay, the Kiwi yen has slid in dramatic fashion, shedding nearly 500 pips. Support level is now 68.46 is in view, and resistance is 69.47. This is pretty straight clear. I mean, God, I mean, it's really, I want to say surprising, but I'm saying that you have to think. I mean, we did have, and we talked about this, is gravestone doji, but we'd already broken above this key level here, so obviously they tried to make a stand here at the 72 cents, and then, okay, fine, you lose that. Okay, you probably find support at 71, maybe 70.50, and we just kept shedding and shedding. Obviously, a lot of it has to do with what's going on, which is, as they say, you always want to go with the technicals, but fundamentals, overwhelming fundamentals will kick technicals in the A. Well, obviously, what's happening with equities and also what's happening with the whole thing with China has driven the market into the safety of the yen. So it has just been a torrential fall. Nothing short of that. And I don't think that's speaking with any type of hyperbole. So it's going to be 68.46. Resistance 69.47. I think that's reasonable. Yen pairs are pretty oversold. Now let's go on to the euro yen. Been total demolition against these yen pairs. Look at that. Unbelievable. The euro yen has come into major volume support level at 1770. The pair should find consolidation with the upside resistance at 1848. And we'll pull this back to a closer look so you can see what we're looking at. See right in here? The market falls. And the dramatic fall it was. Look at that. And where does it pause at? 1770. So we eventually rally hard, fall hard, come back, and where's the market find support again? 1770. This should actually be lined up heavier line because it's major there. So you can see the significance of that, 1770. And resistance, 1848. So now let's go move into the euro odd. This is just like unbelievable. I mean, you know, remember we saw this move and this return move in the market really got clipping. We fell back quite a bit and look at this ascension. It's just unbelievable. I mean, look at how strong this bar is. The euro on has rallied nearly 600 pips, taking out eclipsing recent highs to nearly 65 even. Resistance is 64.69, which actually we're above that now, with support at 63.67. So there's the outright highs at 65. We've already challenged at 65.65 already. And here we are just loading it back up again. Doggone it. We're coming on full bore again. We're just going to go with 65 even for resistance. This will be support for right now, 64.19. Well, actually, just a hair low right there, 64.09. Unbelievable, this move. I mean, unbelievable in the sense that look how we had worked here and made a strong move. Potentially we could go higher. I guess if you take this and push that up higher, give us an indication, but wow, what a move. I mean, just to come back in such dramatic fashion. Let's go move into the Euro Kiwi. The Euro Kiwi rally has been swift and continuous. The pair has reached a major resistance of 71.31. Intermediate support comes in at 70.19 with secondary support at 69.42. So right now at 61.31, eventually, obviously with RBNZ, we can push beyond that because we're looking to go in and cut, or they're looking to cut. Beyond that is right here at 71.74. We've already reached the 71.31. We'll stay with that for right now, 71.31. And support we had was for 70.19. For right now, it's going to be 70.51. 70, let's just say here alone. It's 70.48. And let's go now move into the ASEAN. The ASEAN has lost all key support. Mile markers on the way down are the January flash crash of 70.62, followed by 69.47. Resistance is 72.39, then 72.91. So this thing has fallen so much, and you know, they may try and hold, but you know, who'd want to buy this thing? You know, I mean, look at that. It's just been, like I said, other than some simple short covering, is, you know, really just some, you know, shorts coming in, stepping in, coming a little bit, but really that's it. I mean, just for the sake of, you know, we'll go on and go right here with 71.03 ahead of that flash crash low. So we're going to go with 71.03. Let's look at another thing also here. Hold on. We've already even taken out to 61. The next one will be 261. I'll just go with 71.03, which is my first thought, 71.03. $72.38. Guppy has not been able to find relief. Volume support comes in at 27.90 with resistance at 29.14, followed by 29.80. We're going to look at this 27.90. Hang on a moment. You see right in here, right there. There's even more below, but I mean, which is 27.04. But we've got some coming in right here, 27.90. So that's what I'm coming up with that. So it's 27.90. And resistance will be right there, 29.58. We'll give it a hair higher, right there, 29.65. Well, it's actually 100 pips higher. So, right, we'll go for right now, 29.13. We'll call it 29.14 on a very, very short haul basis. But you're going to have your, I don't think the BOJ isn't going to, they're not going to go in and intervene right now. They need to let the water, they need to let the, they need to let things calm down a bit, because it'd be fruitless to come in right now, because then it'd be quickly sold right back into. They need to let the market get to a point where it's consolidated and it's ripe for a rally back. Like, let's say that we come down here, now not necessarily so much with the guppy, let's say about the Dalian or the euro yen, and we consolidate and you kind of hold this area here, and the shorts aren't able to press much further. Then the BOJ comes in and then whacks the market. Then you get more bang for the buck. If they were to come in right now, after we've seen this dramatic sell-off, and try and buy it, turn around and defend it, people would just sell right back into it. We have to show that the market's holding at these lower levels before any type of intervention would stick. So they're not going. You don't have to worry about the BOJ coming in right now. Now, if the Dalian sheds another 200 pips over the next 2 days, yeah, then you have to worry about them coming in pretty lickety split quick, but not today under these circumstances unless we take another dramatic move lower. Let's go and move into the sterling odd. Sterling odd has rallied to 1813, only to quickly fade 100 pips. Sterling on pervasive sterling weakness. Support comes in at 78.73, resistance at 79.57. We're just a little bit away from back after falling back to 79.57. I'll stick with that. This sterling's an absolute dog, so. And support comes in at 78.73. I'll go with that. 78.73. To start the week, we're going to have to see how things, let them calm down a bit. But you'll have to have secondary resistance levels. I'm talking about in the thought that the BOJ steps in. So you'll have to have one level, and we'll probably have to do that, and then a secondary level that we look at in case it doesn't mean. And once again, if they stepped in, we'll probably see some dramatic move. It's not going to be something. It's not going to be wild out of the box, but it won't be tepid. I think it'll be a little bit more than that, enough to get us to rally probably 150, 200 pips, maybe 2.25. Against different pairs. So you will have to start to stretch that out as the week goes on, so that we have secondary levels that we're looking at. Moving back onto the main screen. You see how the euro's still advancing here? That's what I think we're going to make it up to 1154. So I saw some of y'all kind of bounced out of your longs a little bit now, but I think we're going to 1154, and we'll take a look at that. See, the reason I came up with this 1154 is because when a market starts to finally, like the way things are happening right now, and like let's say even with the wand, you just don't get in the way of some things. And I don't think we're in that type of situation, like don't get in the way right now. And the Treasury already said that they could intervene. We saw that in that story. If the dollar continues. But that's going to have to see it further, and we're not. We're seeing the dollar kind of pair off a little bit. But I think here is a good level right there. You see all these touches come across? See, this 1128 is key. No doubt about it. You look at it and you think, okay, well, that's where the market's going to stop. Not necessarily, because you'll always get a little bit of an overshoot. So, I mean, could we make it up here to 1178? Maybe even push it up to here to 1190, like there, 1191. Yeah, possibility. But I mean, this is where you first start to see some people say, oh, okay, I'll lay off now. So you start to see a little bit of a struggle here, this 1154. If you look here on the 2-hour chart, we even have 1165. You see that? Right there. So I'm thinking around 1154. That's what I'm thinking right here. You see, right? You see that little gravestone doji that comes in right there, 1154? And you'll see a bit of a pause. That may equate with the dollar index making it down here at 97.65, which remember we were looking at 97.89 is a key level, but I think we could make it down to 97.65. We'll go back to that. Right there. That on the daily comes right there at 68, but it's right there, which is right there, actually 63. There you go. So got 97.65. Could tick down to 97.63. Probably may, like I said, you might punch the euro up to about 65, almost 70, maybe. I'm just saying, but that's where I've got that 54. But that may equate with us ticking on that way down to about 63. We'll call it 65, though. We'll stick with our 65 here on the cash dollar index. We'll bring this back. There you go, 97.65. We got a resistance here in the dollar CAD 32.36. Certainly, with the concerns in equities, you know, they could push hard, but there's some good resistance here. You can see here we're holding pretty solid there. I think I said 54. We may even squeeze it up to another 16 pips. Maybe go up to 68.70. But I'm just saying that's what I think they're going to. Dalian, this is a good area here. We put 595 from the Asian session. My basic technical analysis was a little bit late. I had flown into Chicago on Friday, and I drove all the way back. And boy, was that an adventure. So I was pretty well pooped. Got in very, very late Saturday evening. But I did get the basic technical done in the Asian session, early Asian session yesterday, and then the basic technical on the cross rates not that long ago. That's all that we have for now here. We'll see you obviously later in the morning. with the daily FX roundup. Thanks for joining us here on the European crossover webinar. Spot up the old bias chart and good luck because it's. I think we'll be. I think you'll see the market kind of settle in as we come into the States. Maybe a little bit of short cover, but as far as the BOJ intervening, that's probably about a week away, I would think, unless we fall off another 200 pips in here. Then yeah, they'd come in lickety split quick. Thanks again.